Dumelang. Let us do question 16, which is analysis of transactions. We are required to analyze transactions of various suppliers that occurred in July 2023, according to the answer book provided. The first transaction has been done for you as an example. Assume that bank has a favorable balance at all times. Now transactions, and the example says the owner contributed 270,000 cash to the business. Two accounts affected there will be capital and bank. Remember, you are representing Veristar suppliers, which is this business here. The owner contributed 270,000 into Veristar suppliers. You will debit bank because money is coming in. You will credit capital because it is a contribution by the owner. And the assets, you will have 270,000 as a plus, which represents the plus from the bank. And the owner's equity will have 270,000 as a plus, which is capital contribution. Before I can even start, I just want to state what affects owner's equity. I normally abbreviate it as side. So it'll be C I D E, which is side. The first C stands for capital. I stands for income. D stands for drawings. E stands for expenses. Capital increases owner's equity on the credit side. Income increases owner's equity on the credit side. Drawings reduces owner's equity on the debit side. Lastly, expenses also reduce owner's equity on the debit side. That's all you need to remember about owner's equity. It's only affected by those four. As to what an expense is, what is income, and all of that, you need to go back to the table that I gave you at the beginning of the year. You need to go back to this table where I stated what expenses are, and I gave you examples of expenses, I gave you examples of assets, I gave you examples of income. Remember this table here. All of this will be a list of your expenses. So when you read the transaction and you see any of this, you must just know that I'm dealing with an expense. The more we spend on an expense, it'll increase on the debit side. All of these ones are your assets, which is divided into non-current assets and current assets. Unfortunately, I can't go back to this. You need to check videos on all of this, where I explain this thoroughly, and your definitions. I specify that definitions will always be in your test. Accounting equation will always be in every exam and test. Note that under liabilities, we've got long-term loan, mortgage loan, then we've got short-term loan, creditors control, and bank overdraft. Liabilities represents the people that we owe. Expenses, these are the things that the cost that we incur to run the business, daily costs we incur to run the business. Income is what we earn. For now, income for grade 9, income is basically what we receive from the services we provided or from selling. Do not forget all of this. I can't go back to this list, but by now you should know what is an expense, what is an asset, and stuff like that. Trade debtors, please know that trade debtors is the same as debtors control. All right, I'm going to go to the first transaction. The first transaction says that Verista's suppliers, which is us, right? We bought packing material. We bought packing material. That's what we bought. And how did we buy this packing material? We bought it cash. Two accounts affected there. It's packing material, cash is bank. We know that. What is packing material? Is it an asset? That's why you are going to get confused. You want to know what it is unless you remember this list from the beginning of the year. And you will notice that packing material falls under expenses. There it is. It is an expense. The more we spend on an expense, that expense will increase on the debit side. As I've specified, that expenses increase on the debit side. I will debit packing material, which is an expense, and credit bank, which is an asset. Bank will decrease your asset because money is going out, and owner's equity will be decreased by packing material because that is an expense. I indicated even there that expenses will reduce your owner's equity. All right. I'm just going to erase that ink over there. On the third, it says that we sold goods on credit to L. Mahlangu for 12,690. Cost of sales amounted to 10,310. When we sell goods on credit, 4 accounts will be affected. We are selling there. We are selling goods. All these 4 accounts will be affected, and I highlighted them. Please check out the previous video on analysis of transactions where I explained all of this. We will debit debtors control and credit sales. Debit debtors control at selling price, credit sales at selling price. Debtors control is an asset and sales is income. Debit debtors control and credit sales. Your assets will increase by the selling price, which is 12,690. Your income increases owner's equity by the selling price, which is 12,690. Your liabilities will be 0. Then you're going to have cost of sales, which is the second part. Cost of sales goes with trading stock. Cost of sales will always be debited whenever we sell goods. And cost of sales and sales will always be on the opposite side. The reason why they're on opposite side is because they enable us to calculate what we call gross profit. Gross profit is simply your sales minus cost of sales. You will get to learn about that when you get to grade 10 up to grade 12. So cost of sales is an expense account, but cost of sales will be debited whenever we sell goods, whenever we sell goods. Then later on in grade 10, when I say, oh, the debtor, not even in grade 10, now in grade 9, when I say, oh, the debtor is returning the goods, it means that when the debtor returns the goods, cost of sales will decrease on the credit side. It only increases on the debit side when goods are sold. It increases at cost price when goods are sold. Trading stock decreases because we are having less of the good of the stock. It's gone. Assets decrease on the credit side. We will reduce our assets by the cost price of goods sold, which will be 10,310. That is for trading stock. Cost of sales is an expense. It reduces owner's equity at cost price. Liabilities will be 0. On the 10th, Veristar's suppliers received 4,200 from B. Naidu, who is a debtor. A debtor is basically paying us. We received this 4,200. Bank is affected. You received money. What was that money for? It was from a debtor. The debtor is paying us back. That reduces what the debtor was owing us. Since we are receiving money, we will debit bank and credit debtors control. Under assets, both of them are assets. If you go back to that list, you will notice that both of them are assets. That is why under assets, the plus is for bank, the minus is for debtors control. Owner's equity is not affected. Liabilities are also not affected. On the 20th, Veristar's suppliers purchased goods. What did they buy? Purchase means they bought goods. So we, as Veristars, we bought goods on credit from Sachin traders worth 5,000 and received 12% trade discount. Two accounts affected before we even look at that 5,000 and the trade discount. Which two accounts will be affected? We bought goods. Goods is trading stock. So trading stock is affected. It will increase because we're having more stock. It'll increase on the debit side. Do I credit bank? The answer is no, because we bought that stock on credit. We are basically going to credit creditors control. Creditors control, we are owing the people that we bought these goods from, guys. And whenever we owe other people, for 20,